Hello.
Steve, Andy, what's going on today?
All right. Thank you, Scott. Hello, Andy. What's up,
Hey,
everybody?
Steve. Hi, Scott. Hi, everybody.
Let's see. I was just working on
You're doodling.
yeah, what do you call that? EKG, heart
Oh,
attack.
yeah. Okay.
Welcome to the Trade of the Week, April 7th, our afternoon webinars. As people start to file in, we noticed that, with the coronavirus lockdown, we're kind of an interesting game in town. I mean, there's no sports. The market is open. The market is extremely interesting right now. So people who may not normally have time to tune into these are able to tune in. So it's good to see a good crowd. So we'll get going. Just a reminder, as people file in, the Trade of the Week disclaimer, we are a publisher. We are a software as a subscription model as well. We're not financial advisors. So anything you see or hear in these webinars is really just our own opinions, and it's not meant to be considered financial advice. If you need that, you got to go talk to the people and pay the 2% fee or whatever they're charging these days, 1% maybe. So Andy and I have been using this program for almost 17 years now, since the beginning. We've seen a lot of changes, and we know that it's a very strong and powerful tool if you know how to use it. But learning how to use it to make it do what you want it to do is not something that's done in the first day or even first week. That's why we give out really nice promo codes to try and get people to try it for 1 month, and you can use that promo code to lock into a year if you decide after 1 month that you really like what you're using trade ideas for. Whether you're a swing trader or a active day trader, we can supply the tools to help you hone in on that method. But it can't be done easily, so we try and be as available as possible, starting with Barry's live trading room. He gives a lot of paid rooms a pretty good run for the money in terms of content and the people that are in there. But if you just have a simple question on the platform or the program, he invites you to jump in there anytime and ask him, and he'll demonstrate something for you. So it's a very nice on-demand feature for people if you're not aware of it. We also take over and give Barry a break at noon Eastern. Myself or Andy or Michael or Sean or Jamie will hop in and take over the YouTube live stream and kind of just give a different set of eyes or a different color, paint a different brush for what we're seeing. So it's not all Barry all day long, so you can tune into that as well. We have the afternoon webinars, as you're seeing now, and of course that daily support session I was mentioning earlier. But also, aside from the live Eastern daily support session, which is great because we can give you a live demonstration, we also have something called Trade Ideas University. It's basically now a canned evergreen 4-part video series that starts with the real basics in the 101 class and finishes up with more advanced stuff in the 401 class. So if anybody wants a link to that, we can drop that, but that's available as well. That's another way of trying to get people up to speed. So man and machine combined is the constant theme here. No man is better than a machine, no machine is better than a man, but combined, the human and the machine work pretty well together. And I'll give you a great example, really. The value of our AI, and Andy's got some thoughts on the AI and what's been going on recently and some ideas of what's going to happen in the near future. Actually, some pretty fresh ideas from a meeting we had today. But with respect to our AI and the human and machine approach, the AI's value is the entry. I mean, let's face it, a lot of new traders especially, you don't know where to look in this giant fire hose of data. There's 8,000 symbols coming at you super quickly out there, and you can use trade ideas to tune it down and filter out the noise. But the AI gives you great ideas for an entry, and there's a reason behind it. You don't need to know the reason as a new trader, so you can just say, okay, I accept this, thank you. Here's AI giving us a curated set of data, whether you're in oncology, sports, finance, or whatever. That's what AI and machine learning and the power of technology is going to be here to do, is give us a proper set of ideas to look at. If you want to have the machine manage that trade for you, in our case, Holly managing the trades, the performance is not as well when you let the AI exit the trade. Quite often the AI exits way too early and it's not really able to take in other information in real time, such as current market information, sector strength, things like that, patterns. That's where the human comes in. So I wanted to give you guys a real world example because I talk about this slide every week of how human and machine work best together. I've seen it. The AI is not something you want to turn your back on. The AI is a great value for the entry, and you should take it from there and manage the trade from there. And I do my best, and so does Andy, to try and help people with some ideas and some simple concepts on how to manage that trade from there. But I'm telling you, that is the statistical empirical data. I'm seeing it. if you just let the AI get in and get out for you, there's money that's left on the table. There's a much better ability to manage these trades as a human. So got hung up on that, but I wanted to because I talk about this particular slide every week, and I thought that was just a pretty good real-time working example that we have noticed. Sure, John's asking for the link. I'm sure Andy will be able to throw a link in the chat window for John and anybody else that would like to see.
Yes, I'll do that.
Perfect. So April 7th, 2020. Don't forget, guys, did you not realize that Friday is a holiday? I actually keep forgetting. If you were not aware, do not show up to trade on Friday. Sleep in if you can. I'm unable to sleep in. I'm unable to sleep, period, lately. But just a public service announcement. We've got tomorrow and Thursday, then we have a long 3-day weekend. So I don't think we have a Friday to develop. It's going to come up on us quick. So we're going to talk about kind of a theme that we started on last week. I said dead cat bounce last week. I'm just going to call it the bounce this week. What happens from here? I've got some thoughts. As I said, Andy's got some thoughts on AI recap and what's to come soon for some new AI versions. Trade of the week this week was kind of crazy because the giant gap up, but we'll address it. And, it did pretty well. If you had the propensity to reach up and chase it and buy it, I did not. I didn't feel like it, but maybe some people did.
Or be patient and wait, let it come back to the fast line. It had a perfect little entry there. You can show it later.
Yeah, we'll take a look at that. Yeah, thank you for reminding me of that. And Peloton, which I am still in from last week, I got some thoughts on that as well. And then, it'll all kind of tie together, fork in the road. We're either going to continue to grind higher or we're going to play the rollover game and test recent lows. And how can we use TI tech to try and maybe get ahead of those two scenarios? So I've got a scan we're going to play with, and we'll set a few alerts from that scan without a doubt. But we'll do it all in order so it makes sense. Let's start off with the SPY. What a difference a day makes. I don't know if you guys caught it yesterday, but in Jamie's webinar, I talked about how yesterday we had a nice pinched non-resolved wedge we were building using that 20-period moving average. We didn't really know what was going to happen. And then come yesterday, boom, a giant exploding candle outside, even with a gap, didn't even close off its highs that much. I'll look at the highs in a second. This was the candle I think spooked a lot of shorts that were maybe hoping for more downside. And it very well could have came. As remember, we talked about the dead cat back rather dastardly, actually. If I roll backwards a couple days, perfect. Look at that candle. Boy, I was starting to think that, we kind of nailed last week's webinar when we talked about running into the pocket and rolling back over and retesting. I would have been feeling pretty comfortable if I was loaded short with that candle. Then you get a stubborn candle broke that didn't line up and get short, or the people that didn't cover their shorts earlier, they were looking for more and got greedy. I actually know a few people in blogs that probably fit that bill. They're rather quiet lately. But yesterday was a tough one, considering, and I showed Apple at the close. I think this was the tell. All day long, and geez, there it is again. There's your gap up, there's your 10-period moving average, and there's your grind higher. That is the reason to start. And then by the time that the get weak into the close, it became kind of a panic, I think. Squeezed out yesterday, got only because being kind of the leader, 200 today. We threatened with a gap up. Look at the NASDAQ over the S&P. I start to think, again, aside from this little dastardly hitch right here, there was a lot of selling today. And if you notice, we're even lower in the after hours. I don't really care for that. And that's a pretty significant level. NASDAQ, which has been leading us up, which bounced at the 200 there and couldn't recapture the 200 there for the most part, failed to recapture the 200 today. So we could go either way, guys. I mean, this could be the beginning of what I said, the dead cat bounce, possible rollover back to retest these lows. As I said last week, these lows aren't typically a one-day event or a two-day event. They're more of a process, and by a process, we need to shake out the remaining people who are not quite on the right side yet. And so the shorts line back up here, and when we do trade back down to these levels and we get a nice rejection candle and start to move back higher, well, that might wash out some of the short sellers at that point. So we kind of need two tests, I think, but if you like, it's work back down there at some point. I mean, let's think about it. We saw some decent news in the markets. That's what the markets are actually gapping up and trading off of, are the New York numbers sliding down a little bit. The models are showing that they've been extremely over cautious in terms of what we're actually now seeing during this week. So that's the reason for the buoyancy. But let's face it, Como could get on TV tomorrow and say, I warned you against this. We have an uptick or an up blip. Think about what that would happen to the market. That would probably be another 1,000-point down day. That's just out there. I don't want to see it, but it's a possibility. So we're going to talk today about the possibility of grinding higher. We've got an alert to maybe look at some ideas for stuff if we grind higher. And I've got a pretty good idea of an alert that might look for the dead cat bounce rolling back over and maybe trying to have a date with prior lows back here. One more thought, and Andy might even not have thought of this one, but there's an old axiom called turnaround Tuesday. Turnaround Tuesday is often thought of in a bull market. You have a bad Friday, it's scary, and we come into Monday and it's really scary, a very scary Monday like Black Monday. And then there's some follow through, a day and a half, like I always say, and then the buyers always kind of showed up on Tuesday, and then we get a nice big reversal candle. There's an actual axiom in the Trader's Almanac called Turnaround Tuesday. Well, if you flip the markets upside down, which we're going to do a little bit later, we had kind of a turnaround Tuesday. This was kind of turnaround Tuesday. Gave a lot of it back here at the close. And so, is that the beginning of something we need to pay attention to? Love that 10-period moving average, and midday, we gave it away right there. Yesterday, big gap up, held the moving average there for the most part, held the moving average for the rest of the day, came in, and what do you know? The price average, the moving average supports the price usually like clockwork. But that's going to show us the next hour or so. Where do we go from there? As you can see, the market did fail. And once we use that simple little binary rule of thumb, did the 15-minute candle close underneath the moving average that was once supporting momentum? Yes, it did. Therefore, I'm not surprised to see that the follow through, because momentum was broken right there. Just before I hand it off to Andy, really, the Dow also kind of in no man's land, but big reversal after a push higher and frustrating a lot of shorts yesterday. This market has a way of frustrating both longs and shorts equally when it's this volatile, for sure. Lastly, the IWM could barely even get above, just to mark that up, could barely even get above that. So typical, IWM's been bringing up the rear, holding down the rear, being the anchor to this market, whereas the NASDAQ has been the leader. But our NASDAQ leader has been now running into some very significant levels here in terms of some moving averages. And we'll see where it goes from there. I kind of feel like we're going to maybe at some point test those recent lows, just because that's what markets do. They frustrate people. Any thoughts on any of that, Andy?
Yeah, you covered it very well. I mean, basically the same things I would have said. I think, the number, I mean, I know this is marketed, a lot of people are looking at the what's happening with the coronavirus, and it's kind of but when you have that kind of sell-off, I'm just, I know a lot of people were thinking V-shaped recovery, big old gap up this morning, but you really have to be cautious about something like that. I mean, there's a lot of damage done, and like Steve said, I don't think this is going to be one. I hope I'm wrong. I hope the cases end up being 90% less as far as the deaths go than what they thought, and we have a beautiful turnaround. But I don't think that's going to be the case. Just watching price action for all these years, it looks like it's going to be a process. I agree with you. I hope we don't go touch those lows, but I think we will. But we'll see.
Indeed.
All right, let me steal it from you, and then I'll talk a little bit about the Holly.
Okay.
All right, so let's just pull up the trades real quick. And really, I'm not going to, it wasn't a good day. Once again, we've been seeing this a lot lately. There's been pockets where we've had good days, but the rest of them, most days, it seems like we're just churning a lot, down a little bit, down. Today was one of the worst days just because there was only one winning conservative trade, and the rest of everything else was over red. But I want to show you the reason we always say, if you're trading Holly, be careful with gaps. Okay, so I'm just going to take a couple of trades here, and I want you to see, let's take a look at this edit. And look where the trigger was called. Okay, we got a call to edit, and look where it was compared to yesterday's close, right at pretty much right at yesterday's high. Another example would be another tailwind here, power. Same thing, right at yesterday's high. And I can go on and on. NEP, I think, was pretty close. Yeah, not far away. It was a little bit below yesterday's high. So the point I want to make here is when we create the base algorithms for Holly, most of them are based. We're looking at daily candlesticks. Okay, intraday, you cannot just look at intraday alone. I mean, even if you're a day trader, you always got to focus on what the daily is doing. And you know, if you're just looking at intraday, you're going to get in trouble. So here's the point I'm making. Let's so say this is a typical filter that you might find in the Holly. So let me just go and put in position and previous day's range. So a filter may look like this. 95 is a minimum and maybe 105 as a max. Okay, so don't pay attention to all this. I just pulled up a configuration. But this may be a filter in it. Okay, maybe the stock, we're looking for a stock that has some volume coming in, it's hitting a new high, and it's right at yesterday's high. So this may be a common base strategy that we have for Holly. So think about what a huge 3% gap up does to this possible alert. You basically throw it out the window. We had a couple, like I said, I just showed you about 3 where they for some reason didn't gap up, and they did trigger. They met all the parameters, but you know, probably the better ones, what would be the better ones that did not trigger today are the strong stocks that probably gapped up 3% or 4% or whatever. Okay, they're just thrown out the window. And I can tell you this right now, we do use a lot of, you know, daily configurations, position and ranges based upon the daily chart. So anytime you have a big gap up in either direction, it's going to throw off a lot of those strategies. And that being said, we had a marketing meeting today, and typically you're not going to see this kind of volatility. This is a once in a lifetime, you know, or I shouldn't say that because we saw it back in 2009, but say once in a decade type of volatility. And, you know, it may last another, who knows, month, 2 months, I don't know. But, you know, in general, 98% of your market action is not going to be like this. And then when everything settles in, I think you're going to find Holly will get back to normal. But that being said, we are working with ways during these volatile days to help find better opportunity by using different parameters as far as maybe using some volatility filters, some percentages versus in our stops, some percentages versus flat, you know, 25-cent stops or something like that. Because if you're using 25-cent stops in this market, you're more than likely going to get stopped out. And but all I want to say is, in this volatility, be careful with Holly anyway, but when you, especially on the gap days, it's tough on her. It's tough. And a guy came in to our online chat today, and I was talking to him, and I said, listen, this type of volatility is difficult on any strategy or any algorithm out there or any model out there. Okay, you can just throw a lot of that stuff out the window because it's very difficult.
All it takes is one filter.
Now, I'm not telling you not to ever take that. That's right. All it takes, Steve's right. All it takes is one filter, something like this, and everything may be lining up perfect, could be a good trade, but this filter is preventing a lot of these trades from firing. So, you know, just keep that in the back of your mind. It will get better. I can promise you that. Things will, at one point, will settle down. We don't know when that'll be, but I think until that time, and also we have earnings season coming up. So focus on NEO, because NEO will play earnings you know, plays, and a lot of times, you know, they will, of course, I have no idea what this earnings season is going to be like after March, but we'll see. But anyway, Steve, I'm not going to go over any trades today. You can see there's nothing to write home about. I'll pass it back to you.
It's a very unique environment the AI has never seen before, so I think, you know, that's kind of the bottom line. and we're going to try and
Exactly.
capitalize. I think, ATR was something, average true range, maybe using bars and candles instead of prices or percentages. Those are some ideas. But that was the takeaway from our guys today when asked about that. Matter of fact, I was just answering somebody on Twitter. Why did AI not fire many trades today? So good question, common question. We're going to try and improve on it. All
Let's see.
right.
Okay. Speaking of questions, what is
Oh yes,
Sean's question here?
thank you. I was
Okay.
gonna demonstrate. I knew I had to move to something. So Sean, I've got two thoughts for you. First off, when you click in the actual trades in the AI, sounds like you're not seeing these buys and sells. You're only seeing past ones on the daily chart. That's what I'm getting from your question. So a couple things I would try is make sure you're actually clicking in the AI window there. And if you have a 15-minute chart or 5-minute, you should see the buys and sells, the blue line, the red line, and the green and red. If you're not seeing that, the only other option I can suggest for you is maybe in your right click option, your properties, you have this unchecked, show all trades. Watch what happens when I turn that off. See, I lose some of that information. So if properties and show all trades are in there, your buy tags and sell tags, the buys and sells on the daily chart are just going to be basically an anchor of history, a watermark history of the days that we did have something firing off during the day, intraday. So hopefully that helped. All right, what we're going to do now is, trade of the week, which is what we talked about. Now, I mean, going into the weekend, we could have gone, many different, we could have gone many different ways. And I need to get that back up. I'm going to lose my mind. Here we go. Many different ways. So let me just kind of zoom this in a little bit. And this is what we had to work with. Perfect. This is what we had to work with going into the weekend. I'm going to talk maybe a little bit about this. This is kind of that bird in the hand setup that I talked about last week or the week before, where we started to get flattening curves and sideways price action, and then just kind of pecking away at the lower end of the channel or the rising moving average before possibly taking flight. So going into the weekend, we had a few charts that looked like this, and Andy helped bring up this one because I wanted to find something that had some really good fundamentals. As we know, stuff got beaten to hell out there. Even the good stuff got taken out to the woodshed. And going forward, it's going to be our job maybe to try and find things that got a little too far too fast. And one of the ways we can do that as a litmus test is to compare how their fundamentals and their balance sheet look. So there was some balance sheet fundamental strength that showed up on this scan. I think it was called, what's it called? Yield, Andy, the name of that scan?
Yield Watcher.
Yield Watcher. Okay, so there's an actual physical scan for that. And if anybody wants it, Andy can drop a copy. So that's what it looked like going into the weekend. A beautiful looking setup. Well, let's take a look at the verbiage, because I said, going into the weekend, we have no idea where the market is going. Depending on what the market does, this entry is up to your own decision. We have no idea how the market's going to open. It may gap up and you might want to chase. It may gap up and pull back, and maybe you're patient and wait for that. But we never really know what's going to happen in real time. Well, let's back up here and we can see something. This is what we talk a lot about. Okay, so the trade of the week is State Street. It opens up and you're like, oh man, this thing closed at 52. This thing's up $2 already. I'm not going to chase this. That's okay. We don't expect you necessarily to chase that. I didn't chase it, and I wouldn't expect you to chase it. But what I missed on the day, because I was doing too many other things, was the thing that I talk about ad freaking nauseum around here. So if STT was put on your radar and you don't want to chase it, well, things can happen throughout the day. And just like anything that gaps up, whether it's the spies and Qs as I was showing recently, big if this thing is for real and this gap is going to hold, that is going to be where the rubber meets the road. That's going to be where your decision point is made, and or your entry can be made, and quickly you can get out if you're wrong. I mean, think about that. Think about everybody that bought up here and chased it and then got spooked on that little red candle right there. They lost $1.50, being as, okay, State Street, I'm not chasing that, but I'm going to watch it. This market's coming back. Something Steve always talks about. The rising moving average is going to meet the price. What's going to happen when it does? Maybe I'll take a chance right here. Well, if it bled down 20 cents, 30 cents, no harm, no foul. You had a pretty good free look, so to speak. But so often that's the case. That's an excellent entry point. And this is really what I've been trying to, teach the people doing one-on-ones and people coming to the market that have no idea what to look for. And going back to what I said, human and machine, whether the AI serves it up or whether the trade of the week serves it up, or whether one of the scans that we built or the scans that you built served it up, that's the power of the technology serving up the idea. This is where it comes to you. Okay, so maybe you did take that trade and all of a sudden it closes on highs. Well, I think you want to stay in a trade that closes on highs like that. Ideally, in hindsight, you take the gift that was given to you on the open, but what if you didn't? Oh boy, what if I do? Oh shoot, maybe I should have sold it. Well, maybe that line is going to be my saving grace. Sure enough, today, that line again was your saving grace and gave you a second opportunity to try and get out. And what did we notice here at the final end? That's your signal to get out. I saw another chart recently that looked just like that. But now we're on State Street, this trade of the week. So if anybody did participate, the perfect way to have played it would have been a nice buy point there. If you didn't sell here, you got a second or third chance up here. But if you didn't get the trades off up there, you should have been paying attention to that broken candle breaking the momentum that was covering a day and a half. Once again, Andy and I talk a lot about momentum. Has a hard time lasting more than a day and a half around here. So if you can take a stock home that closed on highs and had a great moving day and was up 8-9%, get ready to get out on the open or at least midday the next day, because a lot of times that's the most you're going to get. So that was this week's trade of the week. If you took it, I know it was a tough chase to make, but this is the market we have. Peloton, we enjoyed a sideways action all last week, and that sideways action was always tested, it seems like. Let's kind of zoom out here. Tested and bounces back, tested and bounces back. So this orange line just seems to really be the line in the sand. I wish, Peloton would have moved higher. It could have had a great case to make, but it looks like maybe it wants to take another day to play around here. Again, I still maintain it could be a kind of a coronavirus play. The people that do have a lot of money and are told to be staying at home and can't go to yoga and can't go wear their Lululemons at their spin class, they're going to get their husband or whoever to buy them a friggin' Peloton. And so I think that's going to show up in the numbers when Peloton reports next. But we're only interested in price action. So today, a big push down in the morning, a lot of recovery, a pretty good bottoming tail, wicking right off of that area. Okay, no harm, no foul. We're still in the money. I'm being patient. I'd like to see this thing move. So that was last week's trade of the week, still in play. Let's determine what the market's going to give us. When to get out of this thing? I will get out of this thing if it turns around and closes below this approaching 10-period moving average. This has got to be the guiding hand that continues to do what it was doing down here. If it fails, there's no reason to stay in these things. Same goes for the daily chart and the intraday chart. We looked at two different examples on how when it fails. So, as I said, we could be going anywhere here. We'll take the next 15 minutes or so to try and maybe figure out a little game plan. Maybe an plan A and a plan B. Plan A is if this market continues to want to grind higher. Well, what will that take? Well, what I would see is if this market wants to grind higher, we gave a little bit back today, maybe we'll give a little bit back tomorrow, but look at what's coming up to meet it here. Maybe the S&Ps are beginning to do what we've talked about, that bird in the hand trade, where we have a nice base, dig in higher, sideways, and let the moving averages and let the patience of time dictate if this thing is going to take flight out of our hand. That's scenario A. Scenario B is not as nice. Scenario B is one that Andy and I kind of deep down feel is going to happen. We're going to have some sort of a retest of the critical lows here. And from there, maybe we'll start to get everybody on the same page. Either we're going lower and the bulls lose confidence and or become dejected and panic sell, and the shorts pile on and we go lower, or that level holds and then the coast seems clear and maybe, just maybe, we can start to build. So for scenario A, let's use, again, my bird in the hand tool that I like. I've played around with it a little bit today. I've done a few tweaks to it, so I'm happy to give it out if somebody wants. But essentially, we're just looking for stuff that's kind of going sideways, and the event is actually a new intraday low. And if it all goes well, I'd like to see the intraday low spike down right into that flat or slightly rising 10-period moving average. And once it's done that, it seems like the algorithms have reached their goal. They can turn around, flip, if then reverse, go, run, exclamation point, however they syntax that crap. So let's look at a few names here. This is today's history of bird in the hand. Now, here's what I want to suggest to you. This was not a good day for bird in the hand because the market did not hold. A lot of these bird in the hands had some triggers, but they got blown through because the bigger picture of the market blew through them. Let's look at them one by one, starting from the morning. Let's see, this was, actually, I think I need to do a longer history. I was in real time. So we're gonna have some more that we can look at here. Definitely have some names. So I'm gonna try and imprint on the names I like. on the setups that I think are interesting. So I don't know what this is, but that's interesting. It's going sideways. So look at that arrow. When I click on these notes, take a look at the arrow here on the 15th. So we're going to start in the early part of the day. And how does that arrow line up with what we're seeing on the daily chart here? Is it piercing just that flattening moving average and then bouncing up? Yeah, that one wasn't bad. That's not bad. Let's see what else we got here. This one, I'm not quite sure why that one triggered. Not bad. It's almost the same because it's the same one. All right. Let's see if we can start to get some stuff after the opening bell here, because this is all right on the opening. I like this a lot. Beautiful. So there's our 6 minutes after the open, TOTL pushed down, pierced the moving average after going sideways on that. Here's what I would do. And let's just go ahead and we'll do a couple of these. All right, I'm gonna go ahead and put a high through right there. We'll mark up a couple of longs because we're going to try and do both. That's kind of what I'd be looking for there. I really like that little pattern. It's a bird in the hand, ready to take flight. And again, trying to get too tricky, a nice piercing low early in the morning. That's usually when the algos try and test people, and it pierced our moving average. So the stage is set, the coast is clear. The slingshot's been pulled back on this. It could very well take off tomorrow. So we'll use our blue line so we don't miss it if it does go tomorrow. It's kind of a mess. I'm not really interested in that. Zynga, we looked at that. Here's a good example of our trigger happened early in the morning, but then it just bled the rest of the day. That's not what we want to see, and I think that's more of a function of what the market was giving us. We did that one earlier. Same thing here again. BMRN, I think we just talked about that one again. That was triggering often. Okay, court, same thing. Nice push. It would have been beautiful if it had bounced right off that level and moved higher, but it didn't. So again, guys, this is a function of the backdrop. It's not a fact that the scan sucks. It's just not the right day for this scan. The market's not giving us. That's why we're going to try and prepare ourselves for scenario A and scenario B. And again, we're only about 45 minutes into the open here so far. This isn't bad. A nice push down and back up. CVS. That's not a bad play. I'm going to go ahead and mark that one up. Kind of like that. CVS came through a few times. Yeah, interesting. Manufacturing and pharmaceutical, I'm going to stay away from that. The tighter the range, the better I like them. And then, as I said, if it touches in the morning, I like that. I'm not quite sure what this thing is. It's extremely volatile. It must be. Yeah, I'm going to stay away from these triples and iShares and things like that. I'm going to do kind of an abridged version here and see some of the things I like. Tiffany jewelry, wow, they sure did have a big spike, but pushed down and popped right back up. It's trying, it's holding. That's a sideways pattern. Let's go ahead and mark that one up just for fun. Let's see if we can find one more long, and then we'll switch over to game plan B in case the market rolls back over and what we're going to do with those. That's not that bad either. That's all. So I'm going to stay away from the medical and surgical stuff because those are much more story stocks. Failed. I like this. It recovered nicely. It did dip a lot lower after its initial push, but it's hanging in there. Laboratory and instruments, you know, I like that look, but I'm going to pass on the laboratory instrument stuff right now. Those things are just a little too goofy. Big, horrible reversal wick. I'd stay away from that one. So we're starting to get towards stuff towards the end of the day here. What's that? That's another energy company. Interesting. Look at the volatility on this thing. I mean, look at these days back here. Ho hum, ho hum. Quadruple, 10 times factor volatility. That's just insane. All right, that's going to be enough for the longs, I think, unless TPZ might have been a good one. No, it's not a good one. All right, let's move on to plan B. A lot of these here towards the end of the day failed. They're all so the ones that were earlier were looking pretty decent. So that's the scenario for if we want to move higher. I'm not quite sure that's going to be. So here's the second one, all right? We've had one called pull back to the 20 for a long time when we were in pull back to the 20 period moving out, because I think that's what we might be doing. So what we did here is we created this scan that used to buy pullbacks on the 20 going up. And wouldn't you know it, we have this beautiful button called the flip. I've already hit the flip button and it has been flipped. So I'm going to go ahead and share this with you guys now so you can start studying it, but we're going to go through it. I've got a few ideas in mind, but the whole idea and the whole concept here is to look for things that have bounced up with the dead cat bounce, have jumped right into their pocket, typically a 20 period. Ideally, a really nice long topping tail would be good, piercing through and then reversing and closing on lows. We're going to look for a few of those and then set that up. So I'm going to type in flipped. I'm going to call it flip, fade the rip. Give it a new name, actually. And I'm pretty sure I gave you the right code. I'll do it twice just in case. Save and share, copy all. Yeah, it's reversed, RJ. It's exactly what we're doing. So we're taking a scan that we used to buy the dip with. I hit one button called the flip, and everything inverts for me. I don't have to do any brain surgery. Flip button, it shows that it's flipped. Pull back above the 20 is now in the flipped mode. So let's get started. Very first one, that's a pretty darn good looking chart. Office, oh boy, don't get me started on this. I got a feeling the office REITs are gonna have a hard time from this. It's a pretty solid base too. I'm gonna pass on this because the base is so solid and it wasn't a big bounce. I wanna see something that had a bigger bounce. So we're gonna go through, that was a pretty big reversal on that one. Bank Corp on that one, huh? Big reversal there. Feel free to chime in, Andy, if you see anything that you do like. I'm just gonna, actually, I actually wrote a few down. Let's start with those. I'm gonna write a few down. Macy's looked absolutely horrible to me, and I'm gonna stay on that one. I'm gonna mark that up. This was found earlier. We're gonna mark that one up. Macy's. I don't think Macy's is gonna make it. FBC was also located earlier on this scan. We just saw that one. I commented on how nasty that wick was. So let's go ahead and trust that topping wick and put an alert under today's low there. I also had Wyland in here, W-Y-N-D. I'm sorry, Wyndham Hotels. Wyndham Hotels is going to have, that's about the sweetest looking one. I knew you were going to chime in.
Oh, yeah.
That's about the sweetest looking one we got. Okay. A beautiful rejection tail. Okay, beautiful rejection tail. The sector itself, I think, is going to be under duress, just like I think commercial real estate. This one is juicy. But where do you put it? Where do you put it? Some solid support there yesterday. Let's go ahead and try and flirt with that support, and we'll go ahead and just kind of tickle those two wicks right there. We'll call that. That's about the best looking one I've seen yet. And the last one I had written down earlier, prepared for you guys, was SYF, which also looks pretty darn good. Same kind of thing, consumer lending. Geez, let's do the same thing. Let's just see if we can break that little hitch from yesterday. And if we can, I think that might be a short. All right, those are all coded as shorts because I'm putting the line below. So those were the ones I had prepared. Let's just go ahead and before we bring Scott back in, let's see if we can find a few more. We did RPT. Oh no, we didn't do RPT. What is RPT? Investments. Yeah, I mean, there's going to be a dime a dozen in here. I want to find some really good ones that had a big bounce. Nothing that's too shallow of a bounce. That looks pretty decent too. What's this? Beacon Roofing Supply? That doesn't look very good at all. And it just really got pinched in the last minute there. I'm gonna go ahead and use our trade ideas low right there as our trigger. Let's find at least a couple more because these are just everywhere right now. Ideally, they're gonna look like that that one that we saw where it just reversed through up and back. Kind of like that one there too. What's this? Telecommunications. Okay. Pretty low volume. I'd like to see some bigger volume stuff. This one couldn't get out of its own way. It looks like it wants to go lower, but $6 stock. I'm looking for something that had a pretty vigorous bounce and a pretty good rejection. Hilltop Holdings, commercial banking. Yeah, that looks kind of ugly too. You could make a case for that. But I think you guys get the gist. We're just maybe beginning to have to, toys and games, people are playing with toys and games. I'm not going to do that, $2 stock. We might have to start flipping our hats upside down, guys. Buy the dip has worked for so long. And one of the hardest things that I have ever had to overcome was in the year 2001. Up until that point, March of 2001, if you bought the dip, you were a hero. If you bought a new high, you were a hero. And then Abby Joseph Cohen changed everything, and she was a guru at the time. And all of a sudden, buying new highs really was painful. And buying the dip, you got blown through. And if you didn't figure out real quick that you had to reverse everything and flip it upside down and go mirror on this market, you weren't going to last long. And that was the biggest hurdle that I had to overcome was changing that mentality. Andy and I saw a lot of guys make millions of dollars, watched it personally. They'd come in and they'd have a $78,000 morning and they'd go to the beach and we'd just sit there with our mouth agape. Well, those same guys didn't know how to adapt in 2002 and come around 2004. We'd remember that guy? Yeah. He blew up. You're like, how did a guy who made $5 million in the 90s blow up in 2002? That is never going to happen to me, and I vowed that would never happen to me. So this could be a kind of a turning point if things don't change. Sell the rip is going to be in order, and everything that was working before is no longer going to work. So this little exercise we just did here is to try and imprint on some different ideas. Let's do that one more time before we leave here, shall we? Let's imprint on the ideas that we just took a look at. All right, so for the longs, though, a nice push off of that flattening moving average. And I'm locking up here. Here we go. But I got to tell you, these shorts look a lot more juicy to me. You know, a nice bounce, topping tail. That's the best looking one right there, WYND. I really like that one. That's the kind of stuff I think you might have, and SYF. This is the kind of stuff, after my sermon in the last 2 minutes, this is the kind of stuff you might have to start looking. Flip this kind of stuff upside down in your mind, guys, and that's the kind of stuff that was working in a bull market. So if we're not in a bull market, we have to adjust. All right, let's send out these alerts for those that want it, and then we'll bring in Scott. I'm going to share, copy all, and save. Did I do that right?
You did. You did.
Share, copy all. Okay, that's all I got to do. And price alerts is going to be the key here. Price alerts, copy, paste. Good luck to you guys. I don't know if we're going to have scenario A or scenario B. I do feel kind of confident that we're going to see some sort of a retest of those lows in the near future or even weeks. Who knows? Like Andy said, maybe it's the earnings that really freak everybody out, or maybe it's another bad tick down or up in the COVID. You don't know. But in this volatility, you can't trust anything. You can't rest on your laurels. You got to be ready for any crazy scenario to happen. So unless you want to add anything, Andy, I'll bring Scott in.
No, sounds good, Steve.
All right.
All right, thanks guys. Couple items on the way out. We do have a new ebook if you haven't gotten it yet. He has some great ideas on how to use earnings season to your advantage. So go to trade-ideas.com/earnings and grab that free book. It's also got some strategies you can include in your layout in there as cloud links. Got a podcast. We've released a few this year already, so subscribe so you're ready to get the next one. It's Trade Ideas Podcast. Just search for that phrase in your favorite podcasting app. Add us as a subscription. Check out some of the recent interviews that we have in there, and stay tuned for the next one. There's a code that you can use either to upgrade from standard to premium or start a new subscription. Both it saves you 15% off your first month or year of Trade Ideas either way. April showers for the springtime. It's all caps. It's case sensitive, so write that down. Make use of it if you want to get started today. Steve Gomez is Today Trader on Twitter. Also follow at Trade Ideas. We also have at QuantBot and some other handles that you'll find if you follow one of them. Trade Ideas Pro is the Facebook handle to like and share what we post with your friends. And the best place to ask questions is the info@tradeIdeas.com email address that goes right into our help desk and gets you routed to the appropriate team member to solve your question. Thank you, Steve. Thank you, Andy. Thanks all. Have a good one.
All right. See you next time.
Thanks, everybody. I'll see you Thursday.